All right, Sean Whalen, welcome back to the Jay Burden Show. How you doing, man?
I'm doing great. Happy to be back. Thanks for having me.
Yeah, I've been doing this a lot, but I realized that I went on a quite a long period of time where I wasn't having my regulars back on, and it's been too long since you and I have spoken. So I'm glad to finally be fixing that. And you obviously had a very specific topic you wanted to discuss. So as the fire department approaches in the distance, do you want to just introduce that topic briefly?
I know when we were trying to schedule something at the end of last year, I was going into JD Vance and basically Wall Street as America's version of the resource curse. But fortunately, the delays kind of worked out because since Trump has taken over, this gets into, I think, the bigger scope of that, which is the leveraged buyout of America. So this team of Elon and Trump together, Trump being the quintessential 80s guy, and Elon literally just doing a leverage buyout of Twitter in order to take it private from having been public. This is something they've done before, and they've used these years, I think, to scale up how this is also what can fix the United States overall, to be able to replace the managerial regime with something that's more responsive and that actually has to be productive for people.
Yeah. So do you want to go into that idea of a leveraged buyout? What is that? Like, when did that concept originate?
So that really became popular in the 1980s, especially with Michael Milken basically creating the junk bond market. So he was able to, there was a demand for high yield assets, and he was able to take advantage of that to create a new source of liquidity for investments when banking in the 70s under a more managerial regime didn't want to make those kinds of risks. So there were people who needed money to start up businesses or make acquisitions or grow their business, but they just couldn't get the capital together. And he figured out a way of creating a new asset class, and that there were plenty of buyers looking to buy into that kind of asset class, and that created the money available to make those investments and acquisitions. Leverage buyouts in this time of the so-called corporate raiders became very popular because, especially like a hostile takeover. If you have a publicly traded company and the stock is kind of languishing, and a lot of firms, these publicly traded companies in the 70s were basically stagnant. It very much mirrored what was happening in the Soviet Union with the Brezhnev stagnation. I've spoken before about how basically publicly traded stock and managerialism is our version, our softer version of that same phenomenon. And these other people who saw these companies and said, "Man, if I only had control of that company, there's all this potential that just needs to be unlocked if only it had better owners and better management." The difficulty is to have to rule like a king. You have to be able to buy up all those shares in order to be in that position. And a leverage buyout is a very clever way of basically you're issuing debt on behalf of the company that you're looking to acquire in order to raise enough money to buy back all of the outstanding shares. So, people are maybe loosely familiar with an IPO or a public offering, where you're raising capital for the business by selling off equity in the company. If you're going to buy it back, you're issuing debt in order to buy back that ownership control. That's basically the gist of a leverage buyout. Now, the danger there is because your company is then going to be so debt heavy afterwards, you have to be able to service that debt. Um, so the company afterwards actually has to be much more efficient or much more productive in order to service that higher debt load. At the same time, and this is, I think, a bit the key insight here for America as a whole as well, or how to overcome the problem of managerialism, is it also enforces discipline. A traditional public company, they have the option of dispersing dividends if they're profitable or not. There tends to be a conflict of interest, or the principal agent problem, that if you're a manager of a publicly traded company, you're much more interested in using what would normally be dispensed as dividends for buying loyalty within the firm. You can create a new DEI department, right, and hire people who are just going to be your yes men and support you politically within the company, even though that department is not actually productive. But if you have this debt load that you have to be profitable because you have to pay back those loans, because it's not voluntary the way that dividends are, that enforces a much more strict discipline. And again, I think that's something we've seen before with how Elon has run his companies previously, and especially with the acquisition of Twitter into X.
Okay, so we've explained how Elon Musk has used this strategy, right? But when you're talking about an LBO of America, what does that mean? What does that look like?
So, yeah, to take a step back with that, I think we have to remember it's very interesting that all of the acolytes or the people who've received patronage from Peter Thiel share a similar viewpoint about kind of one of these open questions in financial nerd circles, and if you indulge me, is what is money? Is it a commodity? Is it a bond, but it's a zero coupon perpetual bond? There's kind of been all these theories, and I think I've nailed it. The source of where Thiel and his people got this from is from John Cochrane and John Taylor, and they've written quite a few books on this, especially. Let me look up the name of the one that really seems to be where it's from. The Fiscal Theory of the Price Level by John Cochrane. But essentially, the argument is that money issued by the government is actually shares of stock in that organization. This is something that Yarvin has brought up. Mike Green, who used to manage Peter Thiel's family office, Eric Weinstein, basically everybody who's been in that circle independently has assumed that this is the correct theory of thinking of it. So with that in mind, what we've seen with a lot of like these U.S. aid types of scenarios is, they're taking in money and they're able to invest it, or they're dispensing it as patronage, but there's no accountability there. Whereas, actually, so let me back up too. The other part of this is Elon just did a Twitter space. I want to say at this point about a week ago. And a lot of people listened to it, thought it was kind of like normie as far as his updates on like what he's doing, and kind of reiterating, hey, we're going after a lot of people who are going to be very upset that we're taking away their their grifts. Please bear with us and support us, because obviously there's going to be a lot of political flack. But what Elon let slip that has not been as publicly emphasized is he specifically mentions that this is the way that you target the dual problems of high interest rates and high inflation, especially the past 4 years of the Biden regime, which has caused something like the most number of bankruptcies and the most number of billion failures in like living memory. And the only way you do that is by actually being productive. This also gets into like Richard Werner, that if you create credit, it can only go into one of three places. Either it goes into an asset bubble, or it goes into consumption, which creates inflation like higher milk and eggs and gas prices, or you have to invest it in something that's actually productive, a capex, where then in the future the deflation from that increased efficiency is going to offset the inflation of that initial credit creation. The fact that Elon is targeting that specifically, again, that's probably his experience with having done an LBO of Twitter or being a successful businessman in general. But he understands that by getting control of the government debt to reduce inflation, that's been a more overt talking point that he's made. That also increases the value of the treasuries that the government is issuing. So that goes back to that's the flip side of money as stock that I was talking about before, which then makes it easier to you have the actual resources available to then borrow and invest. So that's also kind of like a very stereotypical like Austrian school model of do you actually have the resources available to make investments to expand capacity? And if you print money, but you don't actually have the resources to back it up, that's how you get a bubble and a crash. Same idea here is instead of you're expanding that money supply and it's basically just turning into inflation and asset bubbles, which is what the managerial regime has done thus far, the LBO or leverage buyout enforces that kind of discipline on a government scale with how the market for treasuries in order to support investments. And that's kind of the flip side of the sovereign wealth fund aspect of this as well. It's like, well, what is going to be the vehicle where those reserves are going to be available to make investments to be productive? And that seems to be the other side of this that just dropped recently as well, as, oh, well, why don't we do a sovereign wealth fund the same way that China and most other developed nations except the United States does? And the reason the US hasn't done it, well, ostensibly it's because we don't have a revenue surplus, but The other side of it is because under the managerial regime, if you were dispensing patronage, that was done through, USAID or the IMF or the World Bank or these other organizations, all that like confessions of an economic hitman methods. And if that's being shut down, well, what's going to replace it, and how do we get our guys to be able to benefit from a new incoming regime? And that the hints are there that this seems to be the way that they're doing that.
Yeah, that makes sense. You mentioned earlier, right, the problem with Wall Street not being uh, particularly productive. What do you mean when you say that?
So something like 30% of publicly traded companies are zombie capital. Basically, they don't, their profits are usually not real profits. The way that they increase earnings per share is to do stock buybacks and borrow money in order to reduce the number of outstanding shares by buying them back, as opposed to actually having a productive capital structure that then makes them more money. This is kind of part of I mean, we've been hearing about so-called late stage capitalism for probably like a decade now, and in some sense, this is what people mean by that. Um, and that, I think, is a consequence of basically the managers running the company. They're there for a short time. It's similar to the nomenclatura in the Soviet Union, managing state assets. They do it to invest in their own power while they're in office, but there's a crowding out effect. There's opportunity costs, or this is selectorate theory, that if you have to choose between making investments that actually makes the organization or your nation more profitable, or dispensing patronage in order to keep yourself in power, it's the principal agent problem. You're going to spend the money on keeping yourself in power instead of actually doing the things that make the company better off. And the growth of, what David Graeber calls the bullshit jobs, or Peter Turchin, that you have the overproduction of elites. That's basically where the money has gone. I mean, this is the joke or a punchline of every Dilbert comic as well. That Scott Adams called this back in the '90s. That you are bringing on a lot of people who are very loyal within the firm, but they're not necessarily doing anything that is making the company itself more productive. And when you do that on a long enough timeline, this is the result that you have. And this is kind of a common critique in our circles in general is, yeah, on paper, the S&P 500 has never been better, but do you feel richer in your day-to-day life? Do you feel like things are actually getting better? Are the things that you're using really, are we seeing those kinds of improvements that we saw 10 or 20 years ago, the kind of innovation in products that we saw 10 or 20 years ago? In a lot of ways, it seems like that's not. Yeah, cell phones are a little better, internet's maybe a little faster, but we're not seeing these big breakthroughs that we saw in decades prior.
There was a very interesting article I read earlier this morning, uh, and I'll read the headline. That'll basically give it away. Voters were right about the economy. The data was wrong, by Politico.
Yep.
Uh, and that's kind of one of the interesting things in all of this, right? Is that ultimately a lot of the political fight isn't even over how to interpret the numbers. It is how we concoct the numbers in the first place. And when you mention something like the S&P 500 or any of these kind of traditional bellwethers, right? The indicators that tell us if the economy is good or not. One of the big problems is that, and maybe this has always been the case, but that seems more and more disconnected from people's, to quote a phrase from, shall we say, another political camp, their lived experience,
Mm-hmm.
right? That there seems to be, a disconnect here. And it's actually one of the things that I have noticed in, a lot of the discussion about Trump and Trump's kind of proposed economic policies is, very often you have, our favorite panel of experts, right, saying things like, oh, this will negatively affect the US in this way, that way, whatever, kind of citing, economic numbers, which, as we've said before, might be completely and totally made up. But nonetheless, right, there is this kind of rapid public perception that I don't care, doesn't matter to me. And I think that's an interesting development. And maybe you could say, well, that's what Trump has been writing the entire time, right? A certain amount of ambivalence or hostility to the experts. But, if we're talking about managerialism, it is an interesting thing that the kind of political formula of managerialism, which is basically put the experts in charge because we're the best, seems to be falling apart.
Yeah, and yeah, that's exactly right. It's also a question of incentives, right? So the way that the managers were able to wrest control from owners was basically through the promise of, well, share price will always go up. And the actual owners of the shares could afford to be asleep at the wheel or not pay attention to what the managers were doing as long as that share price kept going up. And when you couple that with a managerial regime in government who can print money and expand credit so that, I mean, you'd have to really screw up for the share price to ever go down because you're always just going to get basically free money in order to push that up. That's what's going to free you from that constraint so that you can focus on investing on cronies and political patronage within the firm, as opposed to having that external pressure of, well, if I don't make a better product and people don't buy it, I'm not going to have the income coming in to support this whole capital structure. They've basically been able to decouple that. And I think when that got put into turbo mode is the 2008 financial crisis. I know originally we were talking about this right after you had Peruvian Bull on, and he has that famous chart of, if you look at the S&P 500 divided by treasuries, the economy is growing, growing, growing. The 2008 crash happens. It's flatlined. And basically, it's remained flatlined the entire time to today, except for a tiny little Trump bump that you can see during the first Trump regime, which, of course, crashed right back down because of lockdowns and so on, and then Biden after that. Part of that too is, and as we've seen in as the communist regimes of China and Russia were aging, that, so Russia's a really easy, or the Soviet Union's a very easy example of, basically all the premiers were people who were part of Stalin's circle all the way until you got to Gorbachev. And Gorby was the only one who really had grown up under the regime that these guys had created. The rest of them were the revolutionary vanguard from the beginning. And this created a problem of gerontocracy. And this is, Mitch McConnell is, I think he just fell for like the third time. We see Nancy Pelosi going to and from Congress in a walker. What's her name from who's the other one who just Dianne Feinstein basically passed away in office, and there's kind of this intergenerational conflict of like the boomers, their boomers are being handed their hat and they refuse to leave. They're staying in power in office to the bitter end, and this is what you see from the political class as well. And the way that manifests in these economic terms is their wealth, Nancy Pelosi being a really famous example, is all in capital appreciation of these Wall Street assets, right? These are like accounting fictions that the number goes up and that's what she's attuned to. Whereas anybody who's actually working in these companies, they're not necessarily, or unless they're maybe upper management where they're getting comp in the form of stock issuance, they're primarily worried about the income that they get. And the thing about, kind of like a finance 101 is if payroll is one of the biggest expenses, and if the cost of payroll goes up, the share price comes down. So you've seen these super strong neoliberal incentives going back to the 80s of, and same with like globalization. Where can we go that the labor is cheapest? How can we pay the bare minimum possible because that's what's going to make the share price go up? It's that classic capital versus labor class conflict. Except now it's coupled with age, that the boomers who were able to buy in, when ERISA started in 1974, that's what created IRAs and 401ks, and it was a way of containing inflation at the time when Nixon closed the gold window of convincing boomers who are the biggest class and the biggest earners coming in to defer the income that they would normally make at their job and put it into this asset class with a promise of, oh, but when you're retired, you'll get compound interest. It'll be so much more worth so much more later, and you could take withdrawals then. Well, that's what they're banking. I mean, they've now tied up all their savings and their livelihoods are tied up in that. Whereas all of us who have followed since then, we still need to make that income in order to try to be able to buy in. And the gap that we now have is they were able to buy in on the ground floor and ride that asset bubble up. The rest of us never had the money to be able to buy in, and hence some of these things are kind of sounding like former leftist talking points, right? Of like Wall Street versus Main Street, or wealth inequality. But really, it just has to do with the incentive structure of this capital formation of the people who were able to buy these assets and ride that bubble up, versus the rest of us who were unable to, because that gerontocracy regime made all their money keeping that stock price high, and that's at the expense of paying people better in the firms that those shares are representative of.
Yeah, that all makes sense. So one of the things that we talked about before we went live is that this LBO strategy seems to be a deliberate one, right?
Hmm.
Maybe as you've indicated, coming from Peter Thiel. But you said that there is a degree to which this might answer the question of basically how do we get Trump and Musk's changes to stick, right? How do we get them to last, and so that we're not stuck in 4 years with a new raft of executive orders that basically make all of the progress go away? So, what's your answer to that?
So we've seen some of that with how these buyouts or retirement packages have been offered, and it's similar to kind of how we see the initial tests of that with these tariffs as well, because there is a question of how do we buy out the old regime so that they don't fight back too hard or try to take they don't think they're losing so much that they try to forcibly take it back. Um, the fact that that a structure is now being created to generate the liquidity to be able to buy them out, which is what this leverage buyout is basically doing, is what facilitates that. So Wall Street and the gerontocracy that we're just talking about is kind of really a classic example. And in a lot of ways, boomers are that managerial class that kind of painted themselves into a corner by being generally so self-interested that they would not let share prices dip kind of no matter what, to preserve that what their statements say they're worth on paper, that they now have all this inventory that they're never going to be able to unload on subsequent generations because they starved them out of being able to buy that. It's essentially the opposite of societies grow great when old men plant trees whose shade they shall never sit in. They basically did the opposite, where they said we're cutting down all the trees and using it for ourselves now and leaving a barren wasteland behind. And for years now, I'd been saying, well, I don't really see a way out of this unless what was done in 2008 with mortgage-backed securities and Maiden Lane as a special purpose vehicle. That boy, it's going to take something like the Fed to put it on its balance sheet and do a gated sell-off. I think where the agility mindset of act fast and break things and make rapid innovation that Elon brings into this is, well, if you did it more through a sovereign wealth fund that can act responsively to that, you would be able to buy them out of that position in order to basically give them the retirements that they were guaranteed. So it's the same thing happening on the civil side, except you're doing it generationally in general for these people working publicly traded companies and publicly held stock. And that mechanism of a new organization that has, the power to offer investments to younger people coming in, who they're going to be able to get in on the ground floor and ride that up as boomers are able to sell off their position, that is then going to buy loyalty, appreciation, participation from younger generations and create that system that's going to, that's going to be self-fulfilling. So in terms of, you know, how do I want to put this? Um, by having a structure that works and proves that it can fulfill these promises, especially in these 2 years. I think these 2 years are critical until the next round of elections. And then, obviously 4 years is all that Trump has before who's president is kind of up for debate. Um, they've got to prove that the new system works. And I think that's where they're focused on now, is having this in place, showing that, yes, we can pay people, we make good on our promises, you're going to have these opportunities that you've been denied for like 2 decades, and that, in large, young, white, autistic, straight men are going to have a role where if they do actually participate, they're going to be able to they're going to make good on the rewards that are promised follow that, as opposed to, under the managerial system, it was a bit like Charlie Brown and Lucy with the football, where promises were made of, oh yeah, work hard, there'll be advancement, maybe you'll be paid more, and the football is always pulled away from them at the last minute because that comes at the expense of boomers want to hold on to their position in that regime, or the managerial class wants to hold on to the power and money that they have now that they are being, in a sense, forced out. That frees up those resources to then be able to offer to the incoming people. And once they see that that's real, that's going to get the buy-in to solidify that structure.
Yeah, that's an interesting thing. Honestly, it echoes what what Yarvin's been saying for a while, right? About kind
Hmm.
of like mandatory retirement. And the moment I heard Trump offering buyouts, I thought that was a very, very good move, because what you're effectively doing is, yeah, sure, there's a little bit of a resource transfer there, but guess what? It's the United States of America. Money's fake, right?
Hmm.
But what you're basically doing is you are getting someone out of the system forever, right? This isn't just firing them where they can be reinstated. They're voluntarily getting themselves out of that line of work, which does a couple things. One, uh, it removes them from the direct patronage network, right?
Hmm.
Two, uh, I mean, I don't know about you, Sean, but if someone offered me like 6 to 8 months salary to swap jobs just overnight, I'd probably like that person, right? Particularly if I didn't have a great job or something super fulfilling. So I mean, he's buying a certain amount of patronage there, but also he is removing these people from the network that makes them dangerous, right? He is removing the sort of people who caused all of his executive orders last time to just disappear into the mud, right? At the very beginning. It's a really good move. It's a really interesting move. And to me, it's one of the things that indicates Trump might actually be a serious politician this time around.
Hmm.
It's a very canny move. And on the other hand, right, as you mentioned, the fact that Doge seems to be made up of, as you said, kind of highly autistic Zoomers, right, who are hacking away with abandon. That's also interesting, because one of the big problems that the quote unquote conservative quote unquote movement has had is a hiring problem, right? We can't get good people. And now we have both changed incentives to attack their bench, right? Their base, removed their patrons from the board, and brought in our own, elite human capital. It's a really fascinating chess move.
Yeah, which is, in a functional society, how legacy and transition of power is supposed to work. It just so happens that the managerial regime, which is basically synonymous with the boomer generation, um, didn't want to give up power. And part of that is probably, I mean, same as in any, in the Chinese communists, for example, is if you know that revolutions work, you're never going to let anybody else ever have a revolution. Once you're in power, you're never going to risk being out of power. To your point, where a lot of those fears are put to rest. And I think a lot of these people are not necessarily true believers. And I mean, there's certainly some wackos who are very ideologically committed and think of themselves as the resistance. But I would argue the bulk of them, what they really want is what they've always wanted, which is, basically a safe, easy life. If you're offering them, hey, you're not going to be desperate. You're not going to have nothing left to lose. In fact, we'll give you something that you can lose. Here's, a pension or retirement package. Much kind of like a way like a divorce settlement works. It's okay. If you go away quietly, you're going to get something. If you contest it, you're probably going to get nothing. You get that combination of both the carrot and the stick to achieve the outcome. And yeah, going back to that, the leverage buyout, in order to be able to make good on these promises of, funding this is creating a lot more. It's a huge expansion of money and credit, basically creating almost like another asset class in the process. In order for that to not blow up the economy, because we're already massively over leveraged, and create massive inflation, there's a do or die function of that the people that we're hiring, like the Doge team, they really have to be hyper competent in order for this to not, exacerbate an already fragile system. They really actually have to do a good job, which I think is very in line with how Elon views business in general. I mean, I think he's a true believer about things of, I want to get to Mars. That means I have to have competent people who build rockets that are affordable. He's kind of gamed out what that chain of events needs to be. But how do you align the capital structure that favors competency as opposed to just favoring loyalty? So in a sense, it kind of mirrors, Spandrel and that whole biological Leninism construct, as well as, how if loyalty is easier to pay off than competency, how do you bias the system to be in favor of competency? And this kind of do or die moment seems to be how that's being brought about.
Yeah, it's an interesting point. And I somewhat unfortunately, follow the news pretty closely. And I've been reading, article after article after article about what people are mad about, right? And while they're certainly mad about a number of things, it seems like Bannon uh, has successfully gotten across. Sorry, Stephen Miller rather has successfully gotten across his idea of saturation, right? Which is just do stuff, right? Do a lot of things to kind of confuse the opposition, right? To kind of flood the radar with signals,
Hmm.
and seems like that's working. But one of the the common lines of attack, right, opposing this progress is exactly this, right? Complaining about the bureaucracy being taken away. And I think it's because the left has realized that is an immense base of their power, right? That is how they get a lot of things done. And you in the finance world certainly know this, but anyone who's at all interested in guns or cars or really anything that the government has an interest in also realizes that the unaccountable bureaucracy, right? These kind of like faceless office people decide quite a lot about your life. And if you have that on side, you can really do a lot, right? You can legislate without legislatures. You can rule without a ruler. And so again, right, I'm not making some kind of grand proclamation about, Trump you know, will kind of like remake America into, a golden empire. It's not what I'm saying. But if you were playing the game and playing it seriously, you would have to go after the bureaucracy. And it seems like someone is. And again, our enemies are reacting negatively and not in the kind of like hysterical tones that you hear about when leftists are kind of enjoying it, right? When they like the process of being hyped up. It seems like this is actually hurting them. And one of the other things that has become a rallying point, right, is the phrase "Who elected Elon Musk?" Right, the idea that Elon Musk is the real president, the real power. And so I've spent a lot of time analyzing the different factions at play here. So I'm curious, right? Do you see this kind of like remaking of the economy, remaking of the bureaucracy? Do you see that as being exclusively downstream of Peter Thiel and his tech bros?
Yeah, not to, I don't, I always kind of dread that it comes across as like I'm glazing them, as the kids say. But I think they've thought about that very seriously. And and Mark Andreessen too. This is certainly where they've honed their skills, right? In terms of venture capital, making bets that pay off, seeing the way that things could be as opposed to the way that they are, and how do you get from point A to point B to realize that? And I think that Trump has attracted that crowd, and Elon's kind of a quintessential example of this, of, well, if you are going to pull it off, what does that look like? How does it have to get done? And this is a genuine form of the circulation of elites. That managerial regime where it was done through the credit facility and buying loyalty and led to a lot of stagnation. Finally, and just like we saw with the collapse of the Soviet Union in 1991, basically it reached a point where the nation could no longer feed itself, and people were at a breaking point where they were willing to take anything has to be better than this. And I think that's what they're playing into. But to your point, they're playing it very smart of, okay, well, or like the Spanish Civil War, if our enemies are unable to feed their people, we actually do have to feed our people in order to be the more compelling case. Or the Chinese Communist Party, this is always what they worry about as well, is, okay, well, if we're going to stay in power, we actually have to deliver on our promises of making quality of life better. And as soon as we falter, we notice that we start getting protests in the street, and people become very disaffected, and they lose their inertia or their mandate. Um, yeah, I think that's where they're coming from with this, is how would you actually do this? And that they have the financial chops of understanding both the structure of the current regime as well as what a viable replacement is. And a big part of that, and something we talk about all the time on the right, is, I mean, there's a lot of like, well, where's my Teal bucks, or where's my Elon bucks? And then sometimes that gets diffused with, well, you can't just expect to be given handouts, which is completely fair, especially on the right, even though from USAID, people do just get handouts because they promise to make you know trans children's books or whatever. Um, but for us, it has to be aligned to competency, but also that there has to be that war chest. There has to be those funds available to actually make those investments. And the other regime was very careful about gatekeeping who could be awarded that money and who couldn't. And that's a big part of going back to like David Graeber's bullshit jobs. You've probably heard me rant before. I've always had this question of like, well, where is all this money coming from? How do all these people have so much money? They don't do anything. They admit that they don't do anything, and yet they don't stress over how do I afford a home, or how do I pay my bills, or how can I possibly afford to start a family, like anybody else who's outside of that system. And so, yes, uh, shutting down that system is a necessary part of that, but also to be able to sustainably fund replacement people from our guys to create that. Yeah, I think they're doing it in the same way. It's the national scale version of Peter Thiel's Founders Fund.
It's a really interesting thing. I'm glad you brought up USAID. I was actually talking to my grandparents about this last night. And the two of us were saying exactly what you did. Who in the world was paying for this? And again, I've had my suspicions, right? That all of this was just funded by the government, right? Because there was no clear answer, right? Okay, some of it was coming from NGOs, but even that doesn't make a ton of sense, right? Like why is JP Morgan Chase, or why is, any one of these big companies giving money to, some random little, feminist art project in, Dearborn, Michigan, right? Something like that doesn't make sense until you realize, oh, wait, this is all a giant scam, right? This is all just a kind of elaborate influence peddling operation. And Z-Man on his most recent episode actually did a very good discussion of the kind of like the corruption of NGOs and charities. And I'll put it this way, it's a little bit, it makes you feel good, right? When you realize you're beating people who, don't just have a little bit of support, but have, millions and millions of dollars given them for free to fight you, and they're still losing, right? Like these people are absolutely pathetic. Sorry, Sean, you still there?
Yeah, you just cut out there for a minute. Go ahead.
Oh, I'm sorry. What I basically said is that, it's incredibly justifying, right? Because, these people are given millions and millions of dollars to oppose you, and they still lose, right?
Mm-hmm. Yeah, well, and that so that's part of that, the zombie capital phenomenon, right? That if you're not selecting for competency, you're just selecting for loyalty, for people who will go along to get along. That also compounds, and I think that's why we're having the competency crisis now, right? Is that the people who are selected to survive in that kind of regime are not really capable of solving problems. And when you get a few generations down the line, or a few decades down the line of that, the people who remain in power are just not suited to solve the problems that are created long term by that kind of system. Whereas conversely, those who have gained the strength of having to survive in a market like venture capital, or running a real business, they've exercised those muscles to know how to actually tackle these issues. So yeah, I think maybe even as like Michael Malice says, like our enemies are not that, smart or competent. You just have to have the will, to your point earlier, to go do things. You just have to be willing to actually risk enacting those changes and taking bold steps. And we'll find out very quickly that they're a paper tiger.
So I actually want to ask you a little bit about corporate charity, right? Given your background, you probably know a little bit more about this than the average bear. So obviously, a large part of this has been laid clear, right? We know where the money is coming from. But do you want to talk a little bit about these NGOs and these kind of corporate interests, and how they intersect?
Yeah, a little bit. Yeah, I mean, so this is something that has kind of been known, going back to Renee Wormser, who wrote Foundations, Their Power and Influence, the Reese Committee with Renee Wormser and Norman Dodd. A lot of the John Birch Society people were very big into this. So like this isn't necessarily like a new topic. But the framework that I think helps to understand it, that just kind of makes it, what's not obvious, is it's influence peddling. So the stated purpose of any of these activities is not really what it is. What it produces is the purpose of whatever it is. So any of these charities or one, it's a tax advantaged way to move funds, so you get more bang for your buck because you're avoiding the tax drag that you would have with like a traditional company. Two, what you're really subsidizing is the payroll who are on the boards of these foundations. It's a legal way of doing bribery, so it's just a structure. In fact, anybody who has their like TEP credential, that TEP credential from step.org, um, any kind of like family office or wealth management of like anyone who has over like $100 million, like that, this is kind of like the formula that's very well known for why I mean, that's why every Hollywood actor who has all this money is going to create some kind of charity foundation or business that seems like it's losing money on paper. But yeah, what they're buying is that patronage network. It really is as simple as it's never the stated purpose of whatever it is. It's so that they can be in the room with certain people and rub elbows with them and find out what they're doing and share that kind of information. And it kind of ties into just like that decoupling between profitability and capital appreciation, the difference in mindset between like, well, does this business actually do something that people want, or is it just a number on a spreadsheet that goes up? Similarly, with the kind of what's happened with the economy in general and with social media in general is this is how that luxury belief of the left of post scarcity and fully automated gay space communism is allowed to transpire. And what they take up as the alternative to that, and as Thorstein Veblen covered in Theory of the Leisure classes, then they start competing for the zero-sum game of like social status. I mean, that's also why, speaking of charities, oh, my name is the one that's on the side of the wing of the hospital, right? Or mine is the MacArthur Genius Grant or something like that, right? Like that's how power and influence is wielded within these sorts of circles, is instead of it being about material prosperity, because they feel like, well, what could I buy that makes my life feel that much better? What they're really competing with each other is for social status. And that's done through these kinds of social games and social networks, and it's pay to play.
Sorry, I just accidentally muted, then unmuted myself. Yeah, there's something to that, right? And again, right, if we're talking about incentives, the regime has done an astonishingly good job of, equivocating status with things that benefit them, right? Like good people do things that benefit, the global American empire. It's simple, but it's shockingly effective. And again, this is something that, a lot of the libertarian world gets very wrong, is this: they have this idea of, the economy and government as two separate entities.
Mm-hmm.
And what's been made clear is we live in something much closer to a command economy than we ever thought, right? That the government just gives money to companies to do things, which is really only slightly different than kind of the Soviet system, right?
Yeah, so that's actually the great thing, going back to discussing sovereign wealth funds with Prude and Geo yesterday as well, is that's basically the tacit admission there. It was easier for China and then like a lot of these Middle Eastern oil companies that originally started up sovereign wealth funds to do that. But it's the myth of neutral institutions is all it boils down to, is that we're finally peeling back that illusion, or it's a story that everybody knew wasn't true, but they kept telling the story anyway, of that government is supposed to be like a neutral referee. No, the state is an active actor in all of these things. More than 50% of GDP, I think last I looked at it was like 63% of GDP comes from government itself. And I'm not even sure, I'd have to look at the how that was calculated, but that may not even be including companies that get subsidies or government contracts or what have you. So that pushes that number up way higher. And yeah, as we think through these things, because I know that there's going to be the criticism, especially from the more libertarian-minded people, of, oh, well, now we have, an insular team, the CEO king, who's going to be in the position to pick winners and losers inside of a sovereign wealth fund, or decide what sectors of the economy, if we're going to reshore manufacturing, they're going to be, picking who's going to get that, or how that's going to be done. And how is that any different than like Solana or Barissima or something? And yeah, that's true. One, I think I've elaborated on where the incentive structure is now more aligned that they have a pressure to actually be productive as opposed to it being pure graft. But the other thing we really need to keep in mind, is that since the late 19th, early 20th century, get rid of this idea that like the economy is mostly capitalist and then you've got some government regulation on top of that. It's 90% command economy, and then the 10% for everybody else is we struggle in normal capitalism. It's exactly what Lenin said about the commanding heights. And if you know anybody that's ever like worked in government contracting, like those guys at War Dogs Academy from the movie, or in a company that does government contracting, I mean, they'll be the first to say that too, is when you're getting that kind of money coming in from the government, it becomes very apparent very quick that like, oh, this is all fake. We just kind of pick numbers that that are decided in a boardroom and on spreadsheets rather than through market discovery or price discovery. Anybody who digs into Thorstein Veblen, he's very big on this as well, which I think is very fascinating, is that basically anything above a certain contract size is all, if it's like B2B business sales as opposed to B2C, those prices are basically all by contract and negotiated as opposed to any kind of real market discovery process. So it's not even just government contracting, but anything that's what we would think of as big business, or like healthcare is a really obvious example of that too. They're just making it up based on policy and managerial decisions. There's no real market or price discovery there.
Yeah, it's an interesting point. So, Sean, unfortunately, I have a hard out, so I may have to have you back on to continue this discussion. But if people want to find more of your work, what's a good way for them to do that?
So Twitter and Telegram, I'm on as Sean does it. Look for my forthcoming book, which I'll finally get out. Hopefully I get it published before Tim Dillon publishes his Death by Boomers, where I really elaborate on the foundations of a lot of things that we covered today. And look for me on, I really appreciate the opportunity to be on your show.
Yeah, sure thing, man. I'm happy to have you on. Sorry it has to be a brief episode, but such is the plight of the at-home worker. But nonetheless, I really appreciate it, man. As far as my stuff, the Jay Burden Show is available on Apple, Spotify, YouTube, anywhere you listen to podcasts. If you want to support us, you can either do that with the links in the description or head over to our sponsor, Axios Remote Fitness and Coaching. And everyone at home, keep your head up. Life can't last forever. Good night.